Welcome to the Crypto Prism channel. Let's take a look at the latest price action on Bitcoin. In previous Bitcoin cycles, we've seen this kind of movement before. Price pushes upward, forms an M top, and then drops directly. Today, even though the US stock market is closed, Bitcoin on both the weekly and daily time frame is showing a clear fake breakout pattern. So the question is, how should we approach the current Bitcoin setup? The rebound has stalled. Does this mean the entire upward move has come to an end? In a moment, we'll break it down from both the fundamental and technical side. And if you haven't followed us yet, feel free to subscribe. Let's start by looking at the K-line structure. On the weekly chart, what do we need to pay attention to? After Bitcoin broke below the weekly uptrend line, it went into a period of consolidation. Bulls finally managed to push above the descending trend line. And then we even got a double breakout above the previous high. Under normal circumstances, breaking the trend line and breaking the previous high is the moment when bulls show the strongest upward momentum. But what happened? The weekly candle closed with a wick, a fake breakout. So what defines a full failure of this breakout? From a weekly perspective, we can use the wick tip of the previous candle as the reference point. If Bitcoin falls below that price, around 89,000, then this entire upward structure on the weekly time frame comes to an end. Now let's look at the daily time frame. On the daily chart, we can see something very clear. Bitcoin broke out, pulled back for a retest, bounced upward. But the second pullback dipped below the first wick low. Even though there was a rebound, its strength was extremely weak. And as of this morning, right at the weekly close, both the daily and weekly candles closed firmly below 94,700, the breakout point. From a daily perspective, this confirms a fake breakout. This kind of pattern is something I've warned everyone about before. After a sharp Bitcoin drop, market makers love using this type of choppy channel to make bulls doubt themselves. Because in a channel like this, you keep seeing higher lows and higher highs, but the entire move is simply preparing for a better dump. So what determines when the drop happens? It's when the bottom trend line of the channel breaks dot and that price level happens to be around 89,000. The same key price we just mentioned, if that level gets smashed, this channel structure will accelerate downward. Maybe some of you are wondering, since the US market was closed today, could this drop be caused by fundamentals? My view is simple. Whenever these key levels break, it always coincides with the weekly or daily candle close. Instead of guessing fundamentals, it's better to trust the energy shown in the candles. Bitcoin pumped to 98,000, right to fill the previous FVG imbalance. And it also got rejected perfectly at the 0.618 Fibonacci retracement. This explanation is much cleaner than looking for endless news catalysts. If you insist on fundamentals, I'll mention a bit. Europe is counter-sanctioning. The US wants control over Greenland. And tariffs between the US and Europe are heating up again. So European and US futures are both dropping. That's the news version. But the version that matters, the candle version, is this. On the 4-hour chart, price is currently stuck at 92,610, right on the lower boundary of the short-term ascending channel. This is the bull's first life or death line. Look at the resistance above. 94,000 at the 0.5 Fibonacci level. Previously support, now clear resistance. Lots of trapped buyers waiting to sell at break-even. 97,269 at the 0.618 Fibonacci level. The high of the previous fake breakout, heavy selling pressure. And volume has already told the story. Strong volume on the drop, weak volume on the rebound. Bulls simply don't have the strength to push higher. So what happens next on the 4-hour chart? Most likely, a retest of support gives weak rebound, gives rejection, gives another drop. Price first pulls back to the 91,600 to 92,000 area to test the lower trend line of the short-term channel. If it holds, we get a weak rebound. That rebound hits 94,000 and gets smacked down. The classic support turns resistance pattern. Then when 91,600 breaks, the short-term downtrend becomes confirmed. And price targets 90,946 at the 0.382 Fibonacci level. Alright, that's all for today's video. We'll continue tomorrow.